In the trade war, China's loss is not necessarily America's gain, nor is America immune from the pain of tariffs, even though President Trump wants his supporters to believe both. Two recent announcements undermine his argument. On Monday, Beijing claimed economic growth of 6.2% during the second quarter of this year, a figure that most countries can only dream of. For China, though, this marked the smallest quarterly growth rate in 27 years. Meanwhile, the U.S. government announced that tariffs have so far raised only $20 billion in revenues, short of even the $28 billion President Trump promised American farmers to offset their tariff-related losses. Is President Trump misleading people, even intentionally? Is America winning or losing the trade war? Joining me for the discussion in Beijing is Gong, a professor of economics at the University of International Business and Economics, and from Taipei, Feingold, a senior advisor for the DC International Advisory. Gentlemen, welcome to The Point. A little bit of background in China's announcement on Monday. The National Bureau of Statistics figures show that despite the dip to 6.2%, China's GDP growth is still 6.3% for the first half of this year, despite, quote, slower global economic growth and increasing uncertainties and instability. And this figure, the spokesperson said, is still quite a good performance, especially when you compare it with that of other major economies, and you'll find it better than most of them. In fact, China said it could have resorted to massive stimulus packages for higher economic growth, but instead of doing that, China is committed to high-quality growth, economic restructuring, and industrial transformation and upgrading. So, Professor Gong, how do you interpret this bit of Chinese economic number and interpretation? Is it bad news? Is it good news? Is it mixed news?
I think it's both bad news and good news. The bad news is, let's first talk about the bad. The bad news is that we have to admit that the economy is slowing down due to the macro conditions both in China as well as internationally, in addition to the fact that we're engaged in this trade war. And the good news is that 6.3% growth is still very decent growth. I think the spokesman is absolutely right that very few countries can achieve that kind of growth. I know only Bangladesh and India are a little bit higher than China's, but overall, China is way higher growth than the United States, almost doubles the United States growth, and absolutely doubling almost all the European economies. So I think this kind of a number speaks for itself. China is contributing to 30% of global growth. So that's the good news.
And the background, you have to remember the background, right? We are at, according to a lot of experts, we are at the edge of another financial crisis or economic crisis. John?
I'm not sure about the financial crisis, but we know that the world economy is slowing down, and due to very much partly due to the trade policy from Washington. And globally, we're facing a lot of challenges and problems. And in China, we're not immune to that, being the second largest economy, and also being a very open economy. We are a big exporter, largest exporter in the world. Of course, our exports going to slow down somewhat, especially with the United States. That means that there will be losses in revenues and jobs. These things are not surprising. And I also want to point out that China's economy has been growing nearly close to 10% up to 2014. Ever since 2014, even though during good times our growth rate has been steadily coming down. There's a reason for that, because there is a limit in the sky that sure, we can't keep going like this forever. Yeah. So as we grow larger and larger, it's getting more and more difficult to maintain the same speed of growth, and eventually we'll be convergent to a developed country, a developed market economy, where 2%, 3% is very decent growth.
Absolutely. So when, but the problem is, our normal healthy trajectory will be interpreted as the trophy of somebody else's trade war. Let me go to Ross there. Do you think China's economic dip is first of all the result of U.S.'s trade or weaponized policies against China, and secondly, will China's dip benefit the U.S. economy?
Well, certainly the loss of some export orders to customers in the United States is detrimental to manufacturers in China, whether they're owned by Chinese companies or foreign companies that manufacture in China, but it does have a negative impact on Chinese growth. But of course, having growth of over 6% is still very admirable. Obviously, many countries around the world would like to be growing that quickly. It's far higher than most places in the West, including the United States. But also, we should keep in mind that having 6% growth will give the Chinese leadership confidence to continue with their policies, but also it'll give President Trump confidence to continue with his policies, and that includes the tariffs. So hopefully the ultimate result will be a negotiated settlement. We all hope that this will occur soon. But China growing at 6%, the U.S. still having positive growth, probably does not mean that either side's leadership is eager to give up or make any great concessions.
That's a very interesting point you brought out, Ross, there, because you talked about China's economic number giving Chinese side more confidence, and U.S. President Donald Trump definitely is showing a lot of confidence in his policy. So you think that probably this is going to lead to a deal sooner than later. But John, do you think that's going to be the case, or are we probably going to see the opposite? Because I'm confident I'm winning and you're confident you're winning, nobody will give in.
Well, I think at least that we know that the sky is not falling. I mean, we've been to this trade war for almost a year, over a year now actually by this time, and that it's clear that the sky is not falling. China-U.S. trade still represents a very small percentage of total economy, and actually our exports is not decreasing. I mean, the exports to the the loss of exports to the United States is very much picked up by very significant growth in exports to ASEAN countries, into European Union, to countries engaged in the Belt and Road Initiative. So overall, we know that at the end of the day, if we have to walk from the table, we can. I mean, it's something we can afford. It's not much of a big deal. And I also want to point out that there are two elements in President Trump's statement that I think is clearly misleading information, if not lying. First of all, he said over 1,000 companies are leaving China. That's just not true. Not a shred of evidence of that. I'm not even sure 1,000 companies are planning to leave China. So there's no evidence to back that up.
Yeah.
Second, he said that China's economy has been coming down due to his trade policies. That's not true either. China's economy growth has been steadily coming down due to the reason I've already alluded to.
Yeah, you have already talked about that. Let me just read a little bit of what President Trump said on Twitter for those who haven't read these words. For instance, he said on Monday morning that the United States tariffs are having a major effect on companies wanting to leave China for non-tariffed countries. Thousands of companies are leaving. This is why China wants to make a deal with the U.S. and wishes it had not broken the original deal in the first place. Next, at a White House event, he claimed that we've taken in tens of billions of dollars in tariffs from China. So, Ross, what is your reaction here? Do you agree with Professor Gong's viewpoints on these, or do you have some other opinions?
Well, we know that China is encouraging its manufacturers, or its exporters more specifically, to look at other markets, whether it's in ASEAN or the BRI countries or Western Europe or other places around the world. And that's understandable. They should diversify away and not rely on one export market. But the same goes for the United States as well, that instead of relying on so many imported products, President Trump, when he was a candidate Trump, he did say he was going to pursue policies to bring manufacturing back to the United States, and he's had some success.
Has he managed
is it thousands
that,
of
Ross?
Companies leaving China? Probably not, but...
There's no evidence that American companies are going back to the U.S.
There are American companies that have brought...
There's no evidence that American companies are moving back to the United States.
And he also said that of American companies expanding manufacturing in the United States.
The $20 billion he talked about taking away from China is not true.
Let's talk about the $20 billion some other time. Ross, you do not agree with the statement that American businesses are not going back or not leaving China or not going back to the United States. What's your evidence? What's your backup statistics, maybe?
Well, we have many large American companies that have expanded operations in the United States, and they do that. They make these announcements periodically, and they've done so throughout the Trump administration. There are also foreign companies, not American companies, not Chinese companies, but European companies, for example, that have expanded operations in the United States. Is it to the extent that President Trump would have liked? No, and that's why we sometimes see President Trump criticizing American companies who haven't expanded in the United States. But it's certainly happening. And you ask about data. Obviously, employment statistics in the United States are very good, and GDP growth continues to be very good.
But it seems that
so President
we
Trump
do not
does
know
have some data to back up his claims.
You didn't give any specific names as to companies who have promised to expand their operations, but I know there are companies who are leaving the United States or taking part of their operations outside the United States. For instance, Tesla started to build a whole factory in Shanghai. I know another U.S. motor company was a General Motors, laying off a lot of workers, and then Google also bringing out their last assembly operations out of the United States, bringing it to China. So I do not know whether you have any evidence to suggest that President Trump's policy is having a positive effect. Ross, please, once again.
Well, but some companies move to China, such as Tesla, because China still has, we've been talking about 6% growth. So obviously there's a good domestic market in China, but we don't see American companies moving to China for export back to the United States at the present time, and that's because of the tariffs and the trade tensions that are going on, and that's probably not going to change until there actually is an agreement.
That's absolutely not true. I mean, Apple just announced that they're going to relocate their manufacturing of laptops back to China, and these laptops are going to ship back to the United States for sale. So, there are actually companies going the opposite. I haven't seen a significant press release so far that an American company in China is closing shop and moving back to the U.S. The fact that the United States has a pretty good unemployment rate, the fact that the companies are investing, these are irrelevant statistics pursuant to the question we're talking about here. The question we're talking about here is that American companies operating in China, closing shops, moving back to the U.S., that's just not happening. Some companies are doing that, but not moving back to the U.S., probably moving to Vietnam.
Well, but actually the issue is a bit more nuanced than that, because sometimes American companies source products. They source parts. Remember, supply chains are extremely complex and well integrated. But we see a lot of American companies that have decided, because of tariffs, that they're unable to source from Chinese companies, so they do source either domestically in the United States or from other American trading partners. Now, that may increase their costs, but because of the tariffs, at present time, sourcing from China is more difficult. And again, that's not helpful necessarily for Chinese companies or American companies or even the American consumer. But we certainly know that American companies are sourcing more domestically because it's more expensive to source from China right now.
Well,
I don't think you could deny that.
I do not know whether we have evidence. Let's not do empty talks. Let's give numbers. Let's give facts. How much more expensive it is to source from American companies than to source from China, even with the tariffs. I guess we won't have time for that. But many thanks for my two guests, Gong from the University of International Business and Economics here in Beijing, and Ross Feingold, a senior advisor for the DC International Advisory. And with that, we come to the end of this edition of The Point with me, Liu Xin. We'll take a short break, and I'll come back next day. Follow me on Facebook and Twitter using the handle The Point with LX. Download the application called CGTN to watch the show on your mobile devices, or go to YouTube and look for CGTN The Point. Thanks for watching. You've got The Point.